Welcome to another episode of the Chamber Podcast. I hope all of you had a great holiday break. My name is Rob Johnson. We have a great show for you today as we enter into 2025. Joining me in studio is Rob Larsen and Jimmie Plaskey. They are both of EP Wealth Advisors, formerly of Executive Wealth Management out of Brighton, Michigan. Gentlemen, welcome.
Good morning. Hello.
Good morning, sir. How are you doing?
Good, doing well. So we've done this podcast before under a different name.
Yes.
So some of the big news that came out in the county last month was Executive Wealth Management transitioning to EP Wealth Advisors.
That's right.
Very exciting. Very exciting.
So, Jimmie, give me a breakdown of the why behind this. What was in the transition? What does this mean for the people who you serve as clients? What does it mean for the community in Brighton? I don't want to bury the lead on any. These are the first things I imagine that pop into people's mind when they hear of a company changing names. So let's get into it.
Awesome. So, Executive Wealth Management has been in Brighton and Livingston County since 1985. Been serving almost 3,000 households in the Greater Brighton area since that time, almost 40 years. And as we've grown as a firm, as we've added partners, as we've added advisors, we wanted to really expand our offering. And so what we did is we went out in the marketplace and tried to find a great company that could team up with us to do that. And EP fit the bill exactly. That we believe in a personalized approach in simplifying wealth management. And EP, again, a company 1999 formed, exact same values, exact same vision in terms of client approach, client-centric, focused on the client, not a call center, not a 1-800 number, a personalized relationship.
I guess let's start here. So what are your guys' roles in the firm? I guess, are they changing? What were they before? What are they now? So we'll start with you, Rob.
Yeah, I mean, we're partners. We're now vice presidents and partners of the company. So we are, shareholders ourselves and have equity stake. That's where we came from before, right? So as minority partners with Executive Wealth Management or minority partners with EP Wealth, so for us, it gives us the confidence of knowing that we're working with a very large team of people that are on the national scale, apparently now. So it's where we're going and where we're at. We did really well in the Michigan community, and for us, the job doesn't change.
Just to add what Rob was saying as vice presidents, it's a fancy title that we laugh about, but we are investment advisors. We are financial professionals. We are wealth advisors, having one-on-one relationships with our clients, with those households and those families. And as we add the EP name and become a part of that EP family, our offerings only get more extensive. Our teams only get bigger. I actually met with one of the financial planners through EP, and I was chatting with her, and what she said to me was, I don't have clients, I have advisors. So we're actually adding a full team of financial planners in addition to the services and the certified financial planning designations that Rob and I have.
Yeah.
We're adding large teams behind us. So something we're really excited about and what we can offer to our current and future clients.
So one concern that people have anytime there's a change in management, so to speak, with companies is service is going to fall off. There's going to be more problems, more red tape, more headaches. I know, Jimmie, you and I have talked about this, as it was happening, and we talked about a lot of the benefits that it was going to give current clients and potential clients, of course, at EP. So walk me through some of the things that people can expect from a benefit perspective to kind of hedge against the fears that people might have in a takeover or in a merger like this.
Yeah, absolutely. And it is an acquisition. Executive Wealth Management was acquired by EP Wealth Advisors. And as I've told clients this whole process, we're working very hard for clients not to see a disruption in their day-to-day, right? That we still use the same custodians, same platforms, very similar technologies, that at the end of the day, remember, it's the client's money and they're always going to have access to it. But we're adding, again, those extensive teams. In addition to, let's say, Social Security planning, pension planning, retirement income planning, some of the things that we're known for and very good at, we're adding additional divorce financial planning professionals, business succession professionals, real estate investment professionals.
What else? Risk insurance, making sure your insurance planning is all correct.
Yep. Alternative investments for sophisticated and high net worth investors. So, just a huge team behind us that's all in-house. EP Wealth Advisors is registered as a top RIA through USA Today, Barron's, Forbes, just to name a few. So again, big firm with a really big presence.
Yeah, really, the day-to-day process as an advisor is, being there for your clients on a day-to-day process, day-to-day in and outs of what happens. So for us, it's, always consulting, always making sure we're on track. You build a financial plan out, you implement that financial plan, You constantly talk about it. Make sure you're doing your annual funding, buckets are filled properly, and so on and so forth. So we were wearing a lot of those hats ourselves as solo advisors. And we're still solo advisors. We have our teams underneath us in that sense, but now we have other teams to lean on to do the financial plans with us, other CFPs that work with us, other tax professionals that work with us on the side to make sure that we're doing stuff all year long for tax loss harvesting, for capital gains, for, quite frankly, loss carry forwards, everything like that. And that goes into the insurance professionals. And like if a business owner is trying to sell their business one day, like how do you do that through a proper M&A? So they get those people at the table with you. So really it's looking at financial planning as, yes, it's financial planning, but it's a round table. It's an integrated financial plan. You should have a CFP doing the financial planning work. You should have an accountant tax team with you that's helping you prepare tax documentation. You should have an estate planning team with you, lawyers that are on staff, making sure that your trust is properly funded, properly titled, so on and so forth. And then filling in the gaps with Medicare analysis, Social Security analysis, and pension analysis, and those things that go along with most financial planning. But you should have the integrated approach to how you're managing assets, and that is where the industry is going. And like Jimmie said, EP's been around for a long time. They're very highly ranked, like you mentioned, like on Barron's top 100 list. They're nationally renowned, and now they have a presence in the Midwest. And for us, it's a culture fit. We did our due diligence, trying to find the proper fit, the proper team. You visit some outfits, I would say, and they do things a little differently. The culture's not the same, the processes aren't the same, the feel isn't the same. And when we met, EP Wealth, a lot of that stuff kind of meshed. It was interesting how the personalities fit together really well, and what their goals were, and not having any presence in the Midwest and wanting to expand more into the Midwest. It was a perfect opportunity for all of us. So we're really excited about being their Midwest hub and help control the 4 states, Michigan, Indiana, Ohio, and Illinois. So we're here to roll. It's going to be interesting.
Glad to hear it. And one thing that both of you mentioned is obviously it's a bigger firm, big name, national reputation. That being said, Executive Wealth has always been a local player here in nonprofits, outreach, community causes. Is any of that changing with this name change?
Not at all. It's actually expanding through what we've done in Brighton, right? Still involved in our boards, committees, yep. Right? Financial commitments that we've made to the community. But the expanded national presence. EP is very involved in getting back a lot of pro bono financial planning. A great example is everything going on in LA right now with the wildfires. EP Wealth Advisors was founded in Torrance, California, just outside of LA. Unfortunately, there are a lot of advisors and clients in our firm, really affected by those fires. There's not much you can do as financial planners, right? You can give money, but one thing that we're doing that people want to think about is we're doing pro bono financial planning for anyone affected by the fires. So, right, where are you at financially? Is it insurance conversations? Is it investments? Is it cash flow, right? What does that look like? So we're actually offering that to families out there as well. So it's a firm that really backs up what they say. And so, again, as Rob said, it's really like-minded, liked values in terms of business.
That's great.
Well, you'll see our logo around, just like you saw our Executive Wealth Management logo around, golf outings and nonprofit events and fundraisers and all that stuff. That'll all really stay the same. If not, probably get enhanced way a little bit, I'd imagine.
It's great to hear. One aspect of this is potential new clients. Obviously, with moving to a company that has a little bit of a larger national presence, that's more prospects, more at bats. So if people are listening and they're considering moving over, they're considering getting into this game, what are some of the benefits that you would talk to them about with EP?
Yeah, I think it kind of goes back to a lot of the services that I talked about. In our world, you can only invest money a certain amount of ways. You have your risk appetite, and you can be as risky as you want to. You can be self-directed as much as you want to. But at the end of the day, people are paying for advice. People pay for people to change their oil and rotate their tires. Could we do that stuff? Yeah, we could, but I'm just going to pay for it to get it done because I'd rather have a professional do that type of thing. It's probably a stupid analogy, but at the end of the day, the clients that are interested in our services need help, and they know they don't want to do it themselves. It's complicated. There's so much to follow, so much to look at. The financial news will keep you up at night. the geopolitical stuff that ties into all that, keeps you up at night. You really need to know that you have an advisor you trust, obviously, but like a team that's behind them as well, that provides, proper services that you actually use and actually look forward to. Like what's your cash flow analysis? What's your actual retirement income projections looking like? Are you confidently knowing that you're on track? In 2022 during a down year, how much sleep did you actually lose? Because bonds were terrible, stocks were terrible. Grandma's conservative fund that she had was down over 10, 15% because of how bad the bond market and treasuries did.
I say I'm gonna add to this that
so you need to have someone that you can talk to every day, quite frankly,
that's what it is.
and know
It's a
that
peace
I
of
can
mind.
vent with you and I can be your partner through this journey with you, and I have all the resources that I have behind me to solve the solutions and just give you the confidence. Our motto before was live with confidence at Executive Wealth. And quite frankly, that comes down to knowing that I trust the people that I'm working with, and the numbers still make sense even in bad years.
I didn't mean to cut you off, but it's the same thing. Is we are offering clients a peace of mind that they might not get otherwise. And as cheesy and cliche as that sounds, wealth is complex, right? The things that Rob is mentioning, that list of investments and strategies and considerations that we have to look at as business owners, as parents, right, as soon-to-be retirees, right, as looking to pass on successions and looking at heirs, that is overwhelming, that is confusing, that is stressful stuff.
Yeah,
and so
that's all we do.
our goal is to form that personalized relationship, one, to understand what makes you tick, right? That's, I think, what Rob and I really love about our jobs as investment professionals, but then knowing that we have the team to back it up to make sure that we're doing everything that we say we're doing, right? And we have been an Executive Wealth. There's no two ways about that. But as you talk about expanding our offering to new clients, understanding what's different about EP Wealth Advisors when you go to 135 West North Street, right, is that we have a national presence of $31 billion in assets under management, right? We have a financial planning. The head of financial planning was just on the Investment News top financial professionals of the year.
Yep.
Our new CIO, Adam Phillips, is constantly on CNBC, other financial outlets sharing his financial expertise. Like, we are a large firm with a local presence. So something we're really proud of and excited about.
I mean, at the end of the day, you need to know how you're invested and why you're invested in the ways that you are, and in what accounts serve what purpose. I mean, an IRA, serves a different purpose than a Roth IRA. Your trust account or your after-tax account should be serving a certain purpose. Knowing that you have a team that you trust, you understand the process. That process is communicated to you.
Asset location and asset allocation.
Yeah, asset location is very important. That's what you're paying for. You're paying for something. You need to like your experience. You know what I'm saying? You can't pay for it just to feel like you're paying for it. You need to not see that fee anymore because of the relationship experience has been so good. And some of the most organic ways that we build our business is internal referrals, and it will still remain that way. Some of the biggest ways you still have a successful book of business is having people that you trust and like, and they refer you to your business partners, and it's just all of a sudden this big integrated family, essentially. Yeah. And that's what you want. You want to be their guy, their person, their advisor that they trust. Because quite frankly, we're going to get to know their kids. Their kids are going to be involved in the process too. Next generation planning is very big for EP Wealth, enriching the youth and making sure that they understand the basics of finance. Too many of us get out of high school and have no idea how to invest any money at all, or how to have a great credit score, or things like that. So for them, and I've always taken passion in that too, in the youth. But just making sure you're covering all your bases, essentially, is looking at the entire family, and the next generation is in a good spot, and they're not lost when something happens to mom or dad.
Yeah. As we sit here right now, it's early January 2025. This transition is very fresh. This news is very fresh. What does 2025 look like from a period of adjustment standpoint?
There's going to be a lot of change, right? I mean, when you look at what's happening in our world on a global level, on a domestic level, on a
daily basis.
I say on a political landscape, on a business landscape, on a money landscape, everything is changing, right? And we are in a day of age that, everyone has been saying this forever, right? But news travels fast, and it's faster than ever, and fear sells. And I would say, as we look at 2025, it's going to continue to grow, right? The fear is going to continue to grow. The media is going to continue to have their bias in either direction. And we have to be able to weather that storm. And I think that's part of the conversation that we're having today is, right, when you work with a financial professional, it's being able to weather that storm financially, right? Because that's where those emotions from the news, from what we're seeing, what we're reading, impacts our lives. Because we make decisions based on that emotional news.
Emotional bias, you know, and quite frankly, at the end of the day,
Recency bias, absolutely.
yeah, there's emotional biases and things like that. But when you talk finance and things like that, there should be, you have to put a lot of emotions to the side. Because at the end of the day, are you an investor or are you speculating on what's going to happen in the markets? Most of the time, the markets usually do pretty good. You know, in the last couple of years, you go back to COVID in 2020, terrible downturn that year. The market finished positive. So did you get out when things were terrible and never got back in? And when you got back in, it's too late. So there's a lot of emotional biases that come along with it, but the markets are usually very robust. You know, there'll be certain sectors that get hurt more than others. There'll be, you know, other sectors that outperform others. But there's always a place to put money and to invest. I don't care if it's real estate or gold or whatever it is, alternative assets. But when you look at the landscape of what's going on holistically, this is going to be the year of, is the Fed cutting interest rates? And obviously Trump is coming into office. So there's going to be a lot of macroeconomic conversations about tariffs, about trade. You know, how's that going to impact certain companies, certain industries? How fast does that money fly around? Will we see that this year? Will that be a couple years down the road? But the Fed is supposed to be cutting rates a couple more times this year, so that conversation is very important every time they talk. If they change their stance and they said they decide that they're going to start maybe, you know, modifying their approach and raising rates again, if inflation starts going up again, those things are going to be very important to follow. And quite frankly, those are always the things to pay attention to, the macroeconomic cycle. Politics aside, you know, markets move and they rotate around, but we've seen some down years with Trump. We saw some down years with Biden. We saw, it doesn't really matter who's in office in that sense. So politically, you can have your opinions and we can rant about that stuff. But I'm curious about what's going to impact earnings for companies. Like, how does that really affect the bottom line? How does that affect the jobs market? Stuff like that.
A lot more of it than people think comes down to the confidence that people have in the leadership in the market, and that's one thing that's been interesting. Is all of the tools that we would typically use to adjust for inflation that have been leveraged have not worked, and they have not worked because of the confidence in the marketplace. And I'm interested to see if in the next 2 to 4 years, if there's a stabilization across the globe, if that reinvigorates confidence in the American economy. And if that's going to change, you know, so when we do drop rates 2 to 3 times this next year, is that going to be more effective because of a reinvigoration of confidence in the American economy? Time will tell.
It will. I mean, borrowing costs can't be too high for too long. And the Fed's paying for it.
If we all knew that answer, we'd be very rich.
Yeah. It feels like something has to shake loose here, as there hasn't been a solid 12 months in an investing cycle since 2019, at least from my perspective. I'm not in the industry like you guys are, but I haven't seen a good 12-month period since 2019.
Yeah, where each quarter is pretty good.
Yes.
Yeah. 19 was one of those years. 2017 was one of those years. But 2020, insanely volatile with COVID.
Right.
2021, COVID is still around, so you had lots of downturns in the market. 2022 is the year of interest rates going north as fast as they ever have since the early 80s after they're dealing with hyperinflation. So everybody's freaking out about how high our interest rates actually going to go. You know, I think we're probably at the top of that cycle. I'm praying,
I say, and then I'll add to this, you get into 2023 and 2024, good years. You get into...
But no one's confident.
But the end of Q4, right, the Fed comes out both years and says, oh, by the way, we're not going to cut interest rates as many times as we said we're going to.
Right.
And so we see December pullbacks in both years.
The bond market gets hit yet again. You know, just as the bond market is starting to stand up, it just gets shoved down again.
Yeah, and then you cap 24 with an election cycle and other currency market that goes up and down.
Oh, yeah.
It's been wild. So I think people are yearning for stabilization in the economy, and hopefully in the next couple of years we see that.
And I think just to plan that, I think that adds just that uncertainty that we talk about with investing, is as we sit and have this conversation, we know that money can't be on the sideline, right? You can't keep your money in cash, under your mattress, waiting for a better day to invest, hoping that it's going to come in the future, right? Because no one knows what tomorrow is going to look like. That's why you have a financial professional to build that proper asset allocation, right? To have that confidence again. asset location, asset allocation.
Like, know that you want to invest and you're
Correct.
going to, but when are you pulling the trigger? Is it systematically doing it,
Right.
or you have someone in the back of your head that you can talk to, or someone like us that will be on top of you to invest when the market's down.
Yeah,
If the market has a correction, those are opportunities.
Everyone wants to buy low and sell high, but that's easier said than done. Is right. You laugh, and we all know that.
But when things are low, there's you have to.
That's the biggest fear in the world.
Yeah,
right? No one wants to buy. Everyone wants to
you're
run
on
for
your
the hills.
phone. The market's crashing. You're freaking out about this. Like, maybe I'll just hang on to my cash. Like, no, Apple's cheaper than Apple or Google or whatever. Name your stock. Name your ETF. It's cheaper than it's been in the last 6 months. So now is the time to probably pop that in.
And I laugh.
Investors do that.
Yeah, you look at a retail analogy, right? I laugh, and how many times when people walk into a store do they go directly to the sale rack? Well, it's the same thing when there's a market correction or market pullback. Everything's on sale. If you
Absolutely.
believe that investment is a good, solid, strong investment, then it's on sale.
Yeah.
Why would you not want to buy it?
Or this is the time to fund an account. I've been meaning to do an annual funding for a Roth IRA, or do a conversion or whatever. Like, okay, cool. The market's sold off about 15%. Let's do a Roth conversion from your IRA, $100,000, whatever the number is. Let's fill up a tax bracket. And knowing that you have someone that's like tinkering on that stuff, thinking about that for you while you're looking at financial news, wondering how bad it's going to get. We're thinking, man, there's a couple things we've been waiting to do this year in the financial plan. Let's do it now while the iron's hot.
Comprehensive wealth management, tailored strategies for every stage of life, just like you said, right?
Yeah.
And it's, again, cliche as it sounds, but comprehensive wealth management, and that's what it is.
It is. In the last couple of years, people saw a real big hike in interest rates. So it was easy to say, I'm just going to park money and make 5%. Sure, that's fine. But in 23 and 24, the S&P 500 was up over 20% in both years. A little bit of definitely volatility in your risk appetite. There's conversations to have there, but there's the power of compounding your money needs to be early and often. There's obviously safe money should be safe, but when it's money that's geared for the long run and it literally has a long run, such as your IRA or 401k or even a Roth IRA, you have to know, like, I got to stay in the market. I should be buying more. A lot of our job is counseling around stuff like that.
It's fantastic. So when people are ready to start and they want to partner with you guys on this new collaborative venture, where's the best place for them to go?
I would say the best place would be to visit the website, epwealthadvisors.com.
Yep.
Again, it's going to show the large presence of what we can offer, have our whole breakdown of our team there. We're located in the same building, as I mentioned, 135 West North Street here in Brighton. Our satellite offices in Michigan, Northville, Ludington, and Jackson are all going to become EP Wealth offices as well. So keeping that presence. Phone numbers staying the same. So really the biggest thing that I would say in terms of contacting us, instead of our email address finishing at EWM it's epwealth.com. We're working as hard as we can to make it as easy on our clients and prospects and community to contact us, reach out to us, and their day-to-day.
Fantastic. Anything else before we wrap up, fellas?
No, I mean, we're super excited about the transition. When you go through a merger acquisition, you never know what to expect. I have to say that these folks have been super organized. They know what they're doing. They've been doing it for a long time. Everybody has a team process to everything. So they're going to bring a higher dimension of success for us as far as, obviously they've proved it with how successful they've been. But for us, it's going to be great to be able to just kind of step into that and just kind of like organically just go, okay, it's go time now. Now we have a couple other states and territories, the surrounding communities, that we'll be involved with as well, other counties and things like that. It's going to be a very exciting time for us to grow and kind of spread our wings a little bit. And as a younger generation of partners like me and Jimmie are, and you start looking at it like, okay, that was an amazing, for Jimmie, 12 years, for me, 8 years, last 12, 8-year run was great. That book is closed, and that's a hell of a story to look at and a story to read. But now it's the next chapter of a new book. Mm-hmm. So it's very exciting. I'm super pumped about the technology and resources that we have access to. The personal financial plan website the clients will have access to, so they will always have access to log into their own plan, look at the stuff that we've done in the past, which we've offered before, but it's going to be more robust. I'm pretty excited about the teams that will be on top of us as advisors.
And I would say I'm excited about the long-term stability that as we look at executive wealth management and our clients, knowing that we're joining a large firm that, again, we have what we've called, G2 partners that have a long time, hopefully in our careers left, that as we look at new clients, knowing that the average age of a financial advisor in our country is in the 60s, right? Knowing that Rob and I are nowhere near that, and that our partners are nowhere near that, and that we are with a great firm that is training young advisors to hopefully one day, be a part of our teams and help our clients' families and generations to come. That we are a fee-only registered investment advisory firm, that we're fiduciaries, right? We are going to do what's in our clients' best interest. I'm not here to pitch them a product, and that's the way my career has been for 12 years, and it's staying that way, which I think is the most important. I'm not here to sell someone something. I'm here to have a relationship with them, help provide that peace of mind, and again, at the end of the day, make their net worth grow.
Fantastic. Well, fellas, I certainly appreciate your time, and I look forward to seeing how this continues to grow and build, and how the new brand in this county flourishes.
Sure.
Rob, appreciate
We'll
the
be
time.
around.
Absolutely.
Yeah, appreciate it, Rob.
Glad to hear it. Thanks, guys.
Thank you, man.
All right, everyone, that's going to wrap up this week's edition of the Chamber Podcast. I certainly appreciate you watching. If you want to know more about EP Wealth Advisors, check out the show notes for links to their website. Apart from that, we'll catch you next week with a new episode. Take care.